Hey everyone, and welcome to week four, Ape into Arbitrum with Y2K Finance. Thank you all for joining today. I think we're still waiting for our guest, but just wanted to start off the space by reminding everyone that we are doing games for every single one of these spaces that we're having in our Discord. So if you haven't joined the Discord yet, please do so. The games have been really fun. We've been doing crosswords, different like fill in the blanks, like pop quiz, and the prizes are pretty incredible, like ACX, magic tokens, etc. So I think it's like you have a great chance to win if you're part of the space. And yeah, we'll just wait another like minute or two. I think our guest should be here very soon. So thank you for your patience. Hey, Bumsy, welcome.
Hey, what's up?
Did you want to test your? Yeah, great. Okay, microphone is working well. So maybe Bumsy can introduce yourself. I know who you are, but just so the audience knows like who you are in the Y2K team.
Yeah, absolutely. I'm happy to introduce myself. So I'm Bumsy. I go by Doomsy in the Discord, and I'm the CMO at Y2K Finance. So just in charge of marketing and the community side of things. Happy to be here.
Great. And I guess we'll just get started. Can you let us know? I think I've been really hyping up the crowd that this is like a massive innovation in the DeFi space. But yeah, I would love to hear from a team member in your own words, like why this is such an incredible product and a little bit more about the other team members that you work with.
Yeah, absolutely. So, for those that don't know, Y2K Finance, we are a protocol that's on Arbitrum. And we essentially offer markets slash vaults for folks to be able to hedge against stablecoin assets. So we support assets like MIM, USDT, USDC, BUSD, and quite a bit of others as well. Other ones such as STETH that aren't necessarily dollar stablecoins, but things that are pegged to an underlying asset. And so what we do is we offer these markets where you can bet on, one side offering insurance, or you can also bet on the other side to potentially be a receiver of this insurance. And so it correlates with PEGs and DPEGs events. And yeah, Y2K was created to sort of strike a balance between retail and institutional usage without sacrificing the spirit of DeFi. So just the name itself, Y2K, it was a big moment in the internet, which caused a lot of people to speculate whether the internet would die and cause a catastrophic event for the world. And similarly with crypto, early on, there was a lot of talk around stablecoins and how they would evolve. That's why we sort of went with the whole Y2K theme. It has a really retro look if you look at the branding. It's like 90s styling, and the UI is really similar to what we saw in the early days of the internet. Um, but yeah, that's a little bit about Y2K itself, if you want me to clarify anything else.
No, and I tell you guys this all the time. I'm in love with the Y2K branding. If any of you guys in the audience haven't taken a look, it is really something special. It's really fun. And it kind of toes the line between, leaning into the sort of Web3 user and their personality, but yeah, also really staying true to what you guys stand for. So I think you guys have done a really great job with that. And then I think part of the inspiration, I know you gave me like a great rundown of the inspiration behind your infrastructure, but just out of curiosity, are there any other projects out there that are trying to do something similar since you guys have launched?
Yeah, there's definitely some other insurance products out there. Um, they generally try to provide certain types of more broad insurance. I would say like if you're depositing on a certain protocol and whatnot. Um, Also, of course, you're able to use existing financial instruments to protect yourselves against downside by shorting potentially. Um, but with Y2K, we specifically focus on the market of pegged assets, stable coins, things of that nature. So we have seen some copycats come through, and we do think that it's a space that needs to exist. But we haven't seen quite the adoption that Y2K has gotten so far.
Nice. Okay. Thank you for that. And could you tell us a bit more about your flagship product, which is called Earthquake? And how does that work? And what type of vaults does it offer?
Yeah, absolutely. So we actually brand all of our different products as certain types of catastrophes. So the first product that's currently live right now is called Earthquake. We also have future products called Wildfire and Tsunami. So just kind of playing with that theme of catastrophe and potential doomsdays, right? And so with Earthquake, we essentially offer vaults, like I shared, of around stablecoins, and we offer them on a weekly and monthly basis. And you enter the vaults during the beginning of the deposit period, and then there's a certain coverage period that we provide. So, for example, on the weeklies, we have 2 days where the deposits are open and 5 days of coverage. On the monthlies, we generally have 5 to 7 days of deposit period, and then the rest of the month as coverage. Um, but essentially, each of the vaults are broken down by the individual assets. So if you go on our website, you'll see like things like USDC, Frax, MIM, USDT, and essentially you can decide which side of the vault that you want to play on. So if you believe that a DPEG during that period could occur, you can go in there and you can take on the hedge side. So essentially, you are paying a premium in the insurance model, so a small fraction of what the payout could be, and you can earn up to 10 to 50x depending on if the DPEG does occur during that time period or not. And then similarly, on the other side, if you wanted to uh, guess that a DPEG would not happen, this is actually a really good way to provide collateral and collect premiums. So generally speaking, um, this is like a really good way to earn real yield and emissions as well if you're able to. And generally speaking, you earn around 3 to 10% returns per vault, which is insane. So um, yeah, our product, not too many people know about like the returns that you can achieve. So if you take some time to understand our product and the risk associated with the different sides, you should be able to express your opinion. And either way, you can potentially earn quite a bit through our protocol.
Well, that was sort of my next question. Like, and by the way, thank you for the rundown. But I think, as with any DeFi product, it is a tiny bit confusing. So, would you be able to like give us an example, sort of from like start to finish? I have, I don't know, 100 USDC. What would I do with that? And what are sort of like the steps involved, and what can I expect? I know you did touch on sort of like the results of a potential, uh, so how can I say, like a
Yeah.
50x or whatever that you mentioned that in terms of like an investment opportunity. But yeah, sort of like the steps from start to finish so people can know what to expect when they look at your platform.
Yeah, absolutely. So I'll go over an example, something that's happening real time right now. So there's a lot of news around BUSD that Binance is involved with, and it recently got delisted from Coinbase and things of that nature. Um, so if you were to believe that the risk of BUSD is going up, that they could potentially depeg, let's just say over the next week or so, You would take a look at our strike price and see if it's reasonable to you that it could go down to that price. And you would take your 100 USDC. We actually currently only take ETH, but for the sake of this example, let's just say you have $100 and you want to express that opinion that it's going to depeg. You go into our hedge vault, you go into the BUSD vault, and you deposit on the hedge side. So what you're essentially expressing is you believe it's going to depeg during this week period. And after you deposit and the vaults are now running, if the depeg does happen, then you receive all of the collateral from the other side that essentially expressed they didn't think it was going to depeg to the strike. So it's a lot of terminologies there. I understand, like, the whole insurance model may be confusing to some, but if you're betting against a DPEG, betting that a DPEG will happen, you're going to be on the hedge side and you're paying a premium. If you are betting that a DPEG will not occur, that it will maintain peg, you're going to enter the risk side and you're providing collateral. So you're depositing a lot more on that side. And essentially, uh, you know, no matter which event happens, one side is paying the other. And so it's self-sustaining in that sense. And at the same time, currently, right now, we are setting aside emissions that go to each of the vaults. So we're able to provide our own token as incentives to participate. Um, you do gain Y2K tokens no matter what happens during the vault. So yeah, hope that helps.
Okay, no, that is so helpful. I think at least for myself, I hope the audience all felt that was just equally as helpful. But yeah, I think that was explained super user, how can I say, like just DeFi user friendly. And yeah, I really appreciate you just breaking that down into like the simplest terms possible. So um, I think the next question I had was more so from a marketing perspective. As a CMO, um, marketing the various vaults, as you mentioned, with these different terms that represent disasters, I can understand that there's obviously like a fun element to doing something like that. But did you have any concerns as a marketer about, yeah, labeling them and having that kind of like negative association?
Yeah, absolutely. We definitely want to strike a balance between um, being able to be like an institutional investor where you're really concerned about potentially hedging and the long tail risk associated with certain assets that you may hold a lot of, and also between retail investors who may be more interested in sort of treating it as like a betting uh, type of protocol. So we essentially set our strike prices at a point where it's definitely up to interpretation, but we use really good models to determine what are fair strikes, so you can see whether or not it's mispriced. And if you think it's priced fairly, then generally the spreads will reflect that. So no matter which strikes we determine, the users can express their thoughts on what we've put out there. Um, but essentially, a lot of protocols out there assume that a stable coin is one USD or the wrapped asset is equal to the underlying. But as we know in DeFi, it's not always that case. So we wanted to provide that platform to be able to express your thoughts and opinions. If you think that a certain asset shouldn't be used in DeFi or that you think it's really solid, you can find a way to express that thought and potentially make yield on it. Um, but yeah, in terms of from the marketing side, we never want to um, imply that we believe XYZ is going to happen. We generally just want to provide these markets. We use statistical analysis to determine the strikes based on historical and simulated future data, and essentially let the market decide what their opinions are. We may highlight certain things that are going on in the market related to certain assets, sort of like how platforms out there, let's say you look at, let's say like a sports platform where you can express your probability on whether or not a certain event is going to happen. They usually provide some subset of news or highlights to let you know what's going on. So, for example, me sharing about BUSD does not imply that we believe BUSD is going to depeg to the strike, but we're just helping users be aware of different views in the market and they can come to their own conclusions.
Okay, I feel like you are sort of answering my next question that was just out of curiosity. Like in general, because there was such a stablecoin panic at the end of 2022, just in general, I mean, I'm sure we could, well, correct me if I'm wrong, I'm guessing that we could all see sort of what the sentiment is based on the sort of investment trends on Y2K and from the vaults, but is the sentiment still generally as suspicious of the stable coins? Is it more balanced? To both sides are skewed in one way?
Yeah, are you asking in general, like what people's thoughts
Super
are on
in general,
stablecoins?
yeah. Super in general, like
Yeah,
from what you
yeah.
guys have seen.
Yeah, so there's still a huge need for stablecoins, and obviously the space is extremely nascent. So people who are within the crypto ecosystem need a way to have less price exposure to the assets that are in crypto. It's a very volatile environment, and therefore stablecoins mimicking and keeping peg based on real world assets such as the dollar have been really instrumental for users to not have to get off the crypto platform and stay within the ecosystem. In general, we didn't necessarily anticipate that some of the recent regulatory concerns would be coming out so soon, but we saw the trend of stablecoins and their different designs pretty early on. A couple examples are, for example, UST, right? So that was a big one where there was tons of users, people were treating it as sort of a bank account, and we saw what happened with the collapse of it. And we just saw that stablecoin usage is most likely going to increase rather than decrease in the future. We also saw trends of different protocols coming out with their own stablecoins to use within the ecosystem that are either backed by their own assets or their own yields that they're able to generate. So essentially, the function of stablecoins has been to reduce price exposure to certain assets that may be more volatile. So um, the reason why certain protocols may offer a stablecoin is that they want you to stay on their platform. So you may allocate part of your portfolio to putting it into more riskier assets or strategies, and then maybe you want to park some of that into more stable coins. So if you're able to do that on one platform or protocol, that increases engagement and usage. But yeah, in general, I would say just zooming out, we think stable coins are here to stay, and we want to make sure that with all the different designs out there, um, that users will be able to find markets where they can hedge themselves if needed.
Oh, right. And then I get what you mean in terms of balancing your portfolio out and make sure that you're like appropriately invested according to your risk tolerance. But if stable coins were as stable as we would expect them to be, then Y2K Finance wouldn't have their place or their role in this ecosystem, right? So I guess for our listeners, I think a good question would be, what are the risks associated with stable coins? Because I think the average person would think there's almost none, right? although your platform would suggest something different.
Yeah, so I can go through a couple. So yeah, generally, as you shared, stable coins are supposed to represent a one-to-one ratio between the stable coin itself and the underlying asset. So for example, let's say USDC is supposed to represent at least $1 in underlying value. So if you hold one USDC, you should always be able to exchange it for a dollar in outside of crypto. And other assets are under collateralized or algorithmically sustained. So what I mean by that is, um, let me give you an example of Frax. So at one point, Frax was only 80% backed. That means if everybody wanted to convert one Frax to US dollars, only 80% of their users would be able to do that. And the rest of that 20%, they essentially said that we have real yield from our protocol, which we are giving to, we give users back. So we can make up that difference between 80 and 100%. And eventually, over time, as concerns started increasing around stablecoins, they actually recently announced that they're going to be 100% backed. So that was an interesting move by them. So there's always these different designs that people have of collateralizing their stablecoin. You're able to make more as a stablecoin issuer if you don't fully back your stablecoin. So in DeFi, there's many ways to generate yield and provide that to users. That might cause you to justify under collateralizing your stablecoin. Um, so that's definitely one of the risks that exist in the current landscape. And we anticipate that different designs are going to continue to come out in the future that could be confusing to consumers. And so, yeah, like we want to provide a product that allows you to um, hedge against that in case there's riskier models out there. Um, Another risk that exists are the centralization risk. So crypto in itself is, you know, is meant to be decentralized, and that's the whole ethos behind crypto. And however, in order to be more trustworthy, sometimes entities need to be more centralized. So what I mean by that is, um, for example, USDC it comes from a company called Circle, and it is incorporated in the United States. So we saw that they were potentially able to restrict certain wallets from being able to use USDC. So let's say you were to hold a bunch of USDC, that's your preferred stablecoin, and for some reason they determine you as a bad actor. Well, um, now that money can be potentially frozen and controlled, things like that. Um, so there's definitely risks on different aspects within crypto and stablecoins.
Yeah, thank you so much. I think that's really helpful for anyone who hasn't really thought about it, because on the outside, it does look like there shouldn't be any risk. I mean, it's even branded that way, right? So that's why sometimes for someone who hasn't thought about the potential risk of stablecoins, this Y2K is a little bit confusing of why it's needed in the space. So, yeah, I think that was like a really important, very crucial explanation as to the risks of stablecoins. And then I wanted to ask you, like, a little bit. I think this might have to do with your roadmap potentially, but in the space, there's been like rumblings of, as you mentioned, for stable coins, right? They're based on real world assets, and real world assets with maybe NFT representation in the space has been coming up in conversation time and time again. And was wondering if Y2K was potentially looking at that as another vault or yeah, anyways, what else is in the future for Y2K other than that potentially?
Yeah, absolutely. So we don't necessarily have specific plans to venture outside of current stablecoins or like the types of stablecoins that we currently offer right now. So we don't necessarily have plans to have like real estate or real world assets like that. But of course, anything that's pegged and there's synthetic representation of it, that is something we can potentially offer in the future. But what we have on our roadmap that's coming up next is essentially Earthquake version 2, which is very exciting to us. It's actually currently in audits, so it's actually potentially here sooner than later. The team has been working really hard to ship. And what's coming with that is perpetual options, perpetual binary option vaults. So essentially, instead of this weekly deposit period and coverage and monthly, where you're only able to get coverage for certain days and other days you're not, and then you have to redeposit if you want to continue to hedge yourself or um, collect premiums, whatever side you're on, then essentially you have to keep interacting with the protocol. And we definitely recognize that that was, uh, you know, that causes friction with the user potentially. So the big major thing would be you just deposit once into a vault and you're able to stay within that vault continuously. It will roll over. And we do plan on providing the ability to trade these positions. So if your viewpoint changes throughout holding this vault, then you can potentially trade that to somebody else, and we're looking to create markets around that. Um, Other things that we have planned are potential like order book solutions where you can have two sides of the market. Um, and for 1155 tokens, we want to add additional utility. We can't reveal too much, but essentially we want to have a lot of automation of processes that people currently have to do manually on our platform at the moment. Um, and our roadmap as it stands, we have spec'd out for the next 2 years or so. So we have a lot of innovation that we want to bring to the space, and we're definitely here to stay. So
Wow, what a perfect way to end it off. Like, as you guys have already shown, yeah, such incredible innovation in the space. So I'm sure everyone in the audience is, like myself, very much looking forward to seeing what other incredible products and vaults that we have in store from the Y2K team. Was there any sort of like closing comments that you wanted to give?
um, no, I would say that if you believe that there are certain viewpoints that are not, efficient in the market, then you can take a look at our different vaults and see what the spreads are. Take a look at the different assets and determine yourself whether or not you believe they're going to maintain their peg or not. And there's a lot of opportunity within Y2K if you look more closely. And I would say that our users are definitely pretty advanced, and we'd love to continue to innovate with the community. And yeah, we're currently just really excited about Earthquake V2. So hopefully you guys can look forward to that, where we'll have a lot of exciting changes.
Love it. And I guess the bonus question for you, how do you like a cross Bumsy? I'm putting you on the spot right now.
Yeah, so Y2K has been in talks with Across for just a little while now, and yeah, the bridging solution seems like a strong one that is critical infrastructure. There's a lot of risk associated with bridges. So our team, which I wasn't necessarily part of, determined that, yeah, we need to be able to price in and have different solutions for this type of risk as well. Not only holding assets, but bridging assets from one chain to another is definitely really important. And our team is also in talks with you guys on your oracles. So the UMA side of things, we recently had kind of like a situation where we wanted to take a look at our oracles from a holistic standpoint. So yeah, we're definitely excited to continue partnership with you guys and exploring different solutions for our users.
Oh wow, that's a way better answer than I could have expected. So thank you so much. And yeah, we've had as you mentioned, you really great talks, and the team is super impressed with you guys. So we really thank you for even changing your schedule like sort of last minute and still being able to join in the Ape into Arbitrum campaign. Yeah, once again, Y2K Finance guys, really super innovative product, and as Bumsy mentioned, seems like you have a lot of great minds over in the community. So if you guys wanted to go check them out, as always, in hopefully a day or two, we'll have a special game that is specific to this space. And yeah, I think you guys all have a great chance to win some amazing prizes. But other than that, we will see you tomorrow for our fourth guest, I believe, this week. And other than that, yeah, I just thank you so much, Bumsy, for joining.
Yeah, thanks for having me on and appreciate everyone who joined.
Yeah, thank you so much. Bye, everyone.
Bye.